So our next speaker, Mr. Shivendra Bhatia, you know, eh, he is a mechanical engineer, but he turned into a peaceful weekend investing expert. Now, this is something very typical, I've heard about. When you are investing in the investing field, you are always, your brain and your mind is always, under tension. But his concept is a peaceful weekend, investing kind of a thing, so that you can sleep peacefully during the weekend. Wonderful concept. He's a genius in that. So he is a full time, investment management technology consultant with over 2 decades of experience, and he has set up wealth management offices in uh, prime ministers of UAE, Lebanon, and wealthy professionals in India. He has been, coaching them as well. And he's currently based in Sydney, Australia. So give him a big hand because he's connecting to us from Australia. And he is ex Nasdaq and ex Oracle and ex TCS, ex Finastra, and ex SSNC. All these are stock exchanges, the world's biggest. And he is a peaceful weekend investor on a mission to touch 1 million lives by sharing insights on building wealth using a blend of technical and fundamental techniques for busy professionals. And so he's blending both technical and fundamental analysis, and mentoring and coaching busy professionals. They make stock market investing easy by following his peaceful investing methods. So we welcome you, Shivenji, on to you, and let us have a good insight of how we create our wealth. Thank you.
Thank you, Sang. Thank you so much. Can you hear me well?
Yes, we can.
Fantastic. I'm really honored here, and thank you for such a kind word, Sudhanshuji. First of all, I'm really honored to be part of this forum, and it is such a wonderful weekend I'm having. And I like to kudo Amplify and Kushalji for making, and all the people supporting this from the back end, making this session such a wonderful session. So when I put this topic together as a peaceful weekend investing effort, and given the timelines, it definitely is it challenged me a lot. I wanted to put together something really powerful, which can be transformational and something you can take back and do some actions to it and probably drill down more, right? So it'll be unfair to say that I can give you something big thing in 25 minutes because of complex nature of the topic itself. But at the end of the day, my objective at the end of the session is whether you are investing or not, or whether it is to do with whatever you are in that stage of investing, I don't know at this stage, is you should get the right mindset. And everything, as we had so many powerful speakers and mindset part of it. And Sudhanshu, you have given such a great insight as well. And learning from my son, Shivendra Bhatia as well, he's also having that mindset. I will talk about something very different of him, which he has not shared with you. And also, take you through the journey of right from that mindset, the platform, and then go into deep in terms of the macro view and micro view, and give some case studies at the end. So please, have that pen and paper with you. Make sure you make lots of notes. I'll go a little fast. I'm sorry, I have to do that, but rewind it and probably reach out to me in one of the social media handles. I can drill down more in detail later. How does it sound? Yep. Okay, so what I will do is I will share my screen, and let me know if you're able to see my screen.
Yes, we are able to see your screen.
Fantastic. So the topic is 10 powerful secrets, and we'll go straight into it with right context setting here. So before I go into the details, I want to have a clear disclaimer. Just read through it. I will not go through line by line. It's all for educational purpose only, and no investment advice. All examples are just to be taken as an education purpose, whatever stock names, and doesn't represent my company or my personal views here. All just based on my experience and learning, which I'm sharing with you. All right. So let's start with the top secrets from my mentors, which I've learned. And that is something could be a base building and give you a lot of answers in terms of why, how, and what. And all that will be unraveled in next 20-25 minutes. Let's start with the first one. Have an end in mind. And that's the most important thing. And when I was starting as a journey, I had no idea about what is my portfolio goal. And you can apply this in your own life. So I'm not going to talk about that, but I'm just focusing on investing. And this is kind of base fundamental is you need to know exactly what percentage return you want to know. And that defines exactly, what steps you need to take towards that. And whether investing in stock market, real estate, gold, cryptocurrencies these days are, getting so much famous. And so all that has you need to know what returns you're going to get, and returns are proportional to risk. And all that has to be first have that end in mind, and then you go backwards. And generally what happens is we don't go into the details, we just simply go and invest. And we're going to talk about that in later session. Next aspect is no, no, no. In fact, that you all are here today, and we could have done a lot of great things over the weekend, especially the Easter weekend. And I congratulate you to be here as part and celebrating the World Transformation Day together. You've already said no, so you're already following that. But the context here is about you need to say no to say yes, and yes to investing. And why it is so, we all gone through this journey, and probably you can relate with me. When initial days when I was trying to learn and getting some experience investing, I used to go to the branch, and they had access to my bank account, and they just say, hey, why don't you invest in this insurance linked scheme, and you're going to get this much money at the end, and you invest in this mutual fund, and so on and so forth. And I just fall prey to that. And that is the biggest loophole, or that's the pitfall all retail investors fall in. Say no to it straight away and come back home, do some research. Just these days you have everything on YouTube, just figure that out, and then you can make yes decisions on that. That's the most important thing, because that's all kind of linked, and I'll come back to that later as well. Keep that in mind. Then comes the don't believe everything you hear, and that is one big thing. I have stopped watching any business news channel, for that matter, any news, because negative news sells. So I've stopped watching all of them for the last 3 years. So I don't watch any of them. All my investing is based on reading through the actual data, information coming by the companies, and based on the stock chart, which we'll talk about that in later stage. And unfortunately, I have to say that retail investors fall in the trap of it, because everything is on agenda today on the news channel. So if you want to take one thing away, stop watching them, because that's not going to do any good to you at all. Invest in yourself first. That's one thing which I think I wish I could change that if I have to go back 10-15 years back. Is you don't, and my mentor says that don't be cheap to the greatness. You need to do some value exchange here, right? And we think that we have done the college degree and that's about it. But these days the world is evolving so fast, you need to gain some experience quickly. And we don't think twice spending on mobile phone or iPads or anything, but we do a value exchange and we think we got some great value, but we don't do too much in buying the course. So make sure you invest in yourself outside your college degree and whatever you got. So that's one of the key secrets. Last but not least is a system works, people fail, and that's something can be transformational if you understand that, imply it, and it can be applied everywhere what you do today. But from the context of investing, you need to have a process in place. Remove all subjectivity. Don't do random things. Random things results randomness, and the randomness can be up and down. Mostly it is towards the downside, and you need to have a process in place. And the process is a proven process, a framework which you can repeat again and again and get that result. And that gives you the right framework. So these are the top secrets from my mentors, which I wanted to get that out of the way, because that sounds that becomes a framework, and also the fundamental to what I'm platform, which I'll be talking less. Okay, hopefully it is so far you're enjoying it, and if you please write down comments below, so probably I get some feedback from you guys as well. So the end motive is that you don't work hard but work smart, right? That's the important thing. Now one of the other key message, and most of you say, oh, I don't have money to invest. Where do I get money? Because most of the time we have run the right equation and wrong equation, and we need to fix that equation right. Okay? So we always have been taught, okay, income minus expense saving, and that saving we use either for for investing in property or do other stuff. But actually that is the wrong personal finance equation. The right specific one is you need to have income, pay yourself first, no matter how small amount it is, whether $50, 1,000 rupees, whatever it is. You need to put that aside and then do the expenses. And that is the key message. That amount which you set aside can be invested for long term. And mark my words about long term, we'll talk about that later, because that is the key of creating the overall framework of why are we doing this investing thing, is because we want to change our lifestyles. And investing is a method to get to the financial freedom, and that's what the objective is. And financial freedom is linked to all the great things you guys are doing, whether do the greater good and the whole fundamental reason of world transformation day to day. So that's the objective which I'm running with. So keep that in mind. Make sure you put some money aside and then use for the expenses, and that money we're going to talk next. So this is all the fundamental and the foundational stuff which I talked about. Let's go and go into details of some helicopter view of why stock market investing and why you should take it seriously. This growth chart in front of you, it is all stock capitalization around the world from 2018, no matter what, but that still is hold goods. So the pink one, we always say United States is all about mother of all market. Why? Because they're $30 trillion economy. And whereas India, if you see here, and there's this $2 trillion economy. China is $6 trillion economy. And our Prime Minister in India is talking about India making $5 trillion economy. And that's what you have heard about it. Just see the humongous growth sitting in front of us. And that is next decade of growth, which is going to be transformational if you put your right mindset and align yourself well on those listed companies, which will make those money, and then you can gain out of that. And that is the message I want to give you here. Have the helicopter view, big picture. Don't go into details and noise, which is shown around in business news channels, and that really distorts you from the mission, right? And so have that perspective in mind, and then we'll go into other aspect of it. Hope it is useful. Magazine cover indicator, that's another secret, which is something we have seen this happening very recently in Corona times. Chart on the left is talking about the biggest fall we have seen in 16 trading sessions in history. And last time it was seen, the stock market crashed basically. And last time we've seen this in 1929, 35 days, and 1987, 38 days. Just imagine the world we are living in. We are all Twitterati, we are in Facebook, we are connected through all digital channels, and that's resulted in the biggest flash crash in COVID. But hey, what is that? Has to do with great companies you were holding, and suddenly you change your mindset because most of the retail investors throwed away their amazing stocks which they've been holding for a decade, just in this particular crash as it is doomsday gonna arrive. But what happened is stock market gave the biggest gain after that crash, and all the retail investors threw away their amazing investments, whether it's in mutual funds or whether it to do with the direct equity investment, and then they're just sitting on the sidelines to catch up that gain now. And this is a chart for 3 countries which I'm interested in, whether it's Australia, India, and United States of America. And that gives you the answer that you don't need to follow the business news channels. Focus on your right mindset and you'll be fine. Obviously, COVID was a black swan event. Nobody can prepare for it, but you can be in the right mindset and know that, okay, I can't do anything, but at least I'm aligned to the right companies. I know they're doing good. Their business model has not been a failure at all. Then comes in what I always say: if you are not optimistic, if you want to succeed in stock market, you need to be optimistic within first. Otherwise, there's no point of coming in, because at the end, humanity will prevail, and that is the whole objective of it. Humanity prevails. There's a consumerism will there, companies will flourish, and all that will, cycle will keep going on, right? So that's one thing which I want to convey a message there. Now, I'm not going to talk about its chart in detail, but idea is focus on long term, and I've been talking about that from the beginning, because you will hear all that noise about trading, gambling, and all that stuff. If you look at the next few slides which I'm talking about, you'll get that whole perspective out of the window and focus on what you need to do. Here, this chart, it's an S&P chart from 1926, mind you. And if you see the line above blue is all when stock market was rising. Line below the middle line red is all bear market when stock market was crashing. Unfortunately, negative news sells, and media talks about those negative part, and they don't talk about when it was going up. So better focus on the blue, love the red, enjoy the blue. That's the message I want to give you. And reason is, this is a chart of Bombay Stock Exchange, which has been, going up significantly from 1979, and everything has gone in. And I don't want to go in detail, but still, your stock market is around 40,000 now from last with there. So it is a slightly dated chart, but the message is clear. Focus on long term. So what I say, the message is bear market should be seen as an opportunity, never a waste. Bear market, hug that tightly, but we need to have a right mindset and right process. Now you say, okay, great, all of this is great, but how are you going to do that? Focus on how do I find those companies. So I'm sure you're reading newspapers, you have, and contrary to what I'm saying, but obviously you have Times of India. So there's always a column called 52-week high, new high, and lows. And that is the gold mine of information for you. 52-week high means those companies who are making high of 1 year. In a year, it's 52 week. And then why are they making 1 year high? You need to find out, figure that out, and to keep track of those companies, there's something happening, right? So these are gold mine information. You can connect the dots later by doing research on that. I've given you a link there. You can check it online. It is also available in various websites as well. Now, I was talking about that my son Shivendra Bhatia had a great session, and thank you for all that great messages, but he has not talked about something which he is also as an investor. He has been investing in stock market very early from year 7. He has a good portfolio. He's been saving and investing. And this is one of the homework he did when I surprised me when I came back home. He wrote down all the companies which were there in the house. And he says, let me check whether they are listed. And that's all you have to do. You have all those information sitting in your house, focus on them and look at them and, invest on those companies which you use the product, right? Now, I'll just shift a gear now. That was a macro view. Now let's go into something to the business cycles and stock cycles, okay? So I'm again talking about long-term view, and that is the most important thing. Life cycle of a business starts from a startup, which is a nascent phase. I'm not talking about startups which are there, but I'm talking those companies which are listed in the stock market. And then when they come in, they're struggling, they're trying to grow, and then they suddenly find a phenomenal run like Apple's, Google's, and they're still growing, and they go into the next phase called growth phase. And that's what we need to align ourselves. And once the growth phase comes in, because in the capitalist world, everything kind of, average out because the new companies will come into play and eat up market share. And that becomes a mature business. And then there's a decline and the cycle continues. But then how it is linked to the stock market cycle? And that's what it is. We're talking about. This is a diagrammatical view of a cycle of a stock market from the long-term perspective. Initially, we are in the acclimation phase, and which I call as phase 1. And then the company finds at this stage only people, either insiders or people who are doing scuttlebutt. Scuttlebutt is people are going to the showroom, people are talking to other suppliers and getting insight of the company, and they invest on it and align themselves. And then there's a whole heaps of the uptrend happens because they found some gold mine in their services or product, and they have many years of growth in front of them. And then the media talks about it at the top. And that's where retail investors come and jump in when right on the top, when everything has been eaten away. And then there's a distribution phase happens, which is where basically you see that smart investors are exiting, and then comes the big fall. You need to be aligned on the uptrend, and how to get that uptrend is what is all about peaceful weekend investing. And then the whole cycle starts. If the companies are dud companies, then you will not get your capital back. Unfortunately, you lose it. And I have some Hall of Fames in the initial part of my career and a great learning as well. Then let's take a case study here, okay? Because this is important. Everybody knows Eicher Motors. Eicher Motors is a tractor company originally, and then they have famous Enfield Bullet. Everybody knows about it, I'm sure, right? And I wanted that, and my father gave me Bajaj Chetak, which I'm really proud of, and I still have that. And so initially, Eicher Motors was a tractor story, and this is a chart of monthly chart. So I'm just giving you context of the business cycle of the Eicher Motors. They were trying to make the tractor great, and they had some tires. They had a growth. That was a growth 1 of tractor, and then suddenly something changed. Siddharth Lal, the CEO, became a CEO. He's a son of the chairman, and he brought in Enfield Bullet. Everybody became a craze, and you must have seen that. I'm sure some of you already have Enfield Bullet as well in this forum. And that was a phenomenal run of that Enfield Bullet growth. They had a phenomenal run. And if you have invested the same amount which you would have bought the Bullet, you would have made your money 91 times in the stock, sitting as of 2018. And that means You must have hearing the stories of 1 lakh becoming 91 lakhs. And that too, unfortunately, I have to say another thing is that retail investors have an appetite to take losses, but don't have appetite to take profits. And they just come out of it without doing due diligence. And that's exactly the peaceful weekend invest is all about, to be able to have a process in place to be able to write this whole journey and make that difference in their financial position, so that they can live a lifestyle what they want to deserve. And right now the company is in stage of just finding out their mojo again, and they're just figuring out. That's why stock market is not moving anywhere at the moment, and that's why we're waiting. And I'm sitting on the sideline just waiting for what they will do next. And case study 2 is and now that you guys are expert in this, I'm just giving you another case study which will give you some context. This is a company called Rain Industry, and this is a bar chart thing, but it's still the context remains the same. Is the company from 2014 onwards, they were just moving up and down, doing nothing. It was in channel in our terms. And then this is a hyperweight company, they make some special chemicals. And then there's something happened phenomenal that in 2017 to 2018, the company price went 7 times in 1 year. And this is the power of stock market. But then what happened after that? If you were holding it and was holding it tight, you lost all of the gain and the stock went back to its normal position. Just imagine you will be really, gutted with that. So that is important to exit on the right time as well, right? So this is 2 case studies. What is peaceful weekend investing approaches? Basically to give you all that blend of both technical and fundamental analysis, and mixing all that up and giving an advantage from long-term perspective to hold on to that process, system, and method to be able to get into this growth phase of the company. Now, I want to end with some few things, and this is shloka which is going to help you. Karat karat abhyas ke janmati ho sujan, rasri avat jat se sil par parat nishan. What does it mean? Means practice, practice, practice. Unfortunately, there's no shortcut to success. So you need to practice, and then only you'll be able to make perfect. Now, at the end, don't forget, we are all doing for peaceful sleep, and you make sure that you are having peaceful sleep, and that's why all journey of peaceful investing comes into play. So I just want to recap all those 5 key principles and all the 5 another elements which I talked about. And at the end, peaceful sleep is more important, right? So keep that in mind. And I will not talk anything about my journey. I think already been discussed. But one thing I want to talk about, my father, late father, he's been guiding force for me till today. He said, education is key to open many doors. Experience is master key to success, and make sure you follow that. I follow that today, and I want you to also keep that in mind. It's just a great, phenomenal piece which I follow that today. This is some of my journey. I've been talking to some of my mentors who have been guiding me. He's Mr. Chokalingam, comes on regular TVs. I talk to him regularly. He's Mr. Professor Raj Shekharan. He is a only wealth a professor in Christ College in Bangalore. He is retired from stock market. He was vice president in one of the companies. He has a blog. Check it out. He's a book writer. It's an amazing book. You should buy that. I'll give him the link. And he's been visiting my place in Sydney, and we had a great chat with him. And at the end, my free Telegram channel, please join in, and I share all my nuggets there. And this is my website, and all my social media handles are there. Sorry, I have to rush through it, but I think you got a context of everything what I was talking about. So that ends my presentation. Sorry, I took just 16 minutes or 40 seconds more. Sorry about that.
Thank you. Thank you so much, Shivendra ji. It was
you,
so
Shivendra.
beautiful. Master, experience is the master key to success. I really loved that, sentence. Thank you so much for enlightening us with your investment knowledge. Thank you so much.
It's my pleasure anyway. And thanks so much for having me here. And kudos to team again. And
what do you think, Sudhanshu ji, about sir's presentation?
Yeah, I think one very good thing. I'm starting on a shopping spree now, because one slide he said, if you want to buy USA, you need to have just about $34 trillion. You said.
Yes.
Yeah. So just have that in pocket, and you can buy the entire USA. So
Yeah.
that was wonderful. And what you showed was the people, they panic while crash comes over. And during the COVID lockdown, there was a massive crash. But now subsequently, what you showed was everything has come up,
Yeah.
regained all
Yeah.
its. So great insight. And
Yeah.
about that 52-week high, you must notice the stocks which are making 52 high. There is something, there. Wonderful, great insights, Shivenji. Thank you so much for
Yeah. No, no, it's my pleasure to share this and journey. That's great. Yeah. Thank you. That's some.
Thank you. So, Manjulaji, would you like to
Yes.
introduce the next
Ye-
speaker?
Yes. Before that, Sudhanshuji, can you do me a favor? Can you put me a spotlight on me and remove the spotlight on Shivendraji?
Just a minute.
Click on more.
Yeah.
Yeah, thank you so much. Yes. Before that, just a little more quick exercise. I want you guys to not to see your screen, but look at your room and appreciate three things. This is the power of appreciation technique, so which I usually give to my paid clients. So appreciate probably the wall paint color you liked it, or some flower vase, or some doll, or some book you like it. Just look at it and appreciate. Are you appreciating?
Yeah, wonderful. This is a great insight, Manjulaji.
How is that feeling?
See,
Appreciating something, how's that feels?
yeah, in our busy lives, we forget these small moments that there's so many things we can be grateful for in our life, and
Yes.
they are all around us,
Yeah.
every small thing and big thing, whatever. Wonderful, great insight.
Thank
Wonderful.
you. So this is how you can raise your vibration instantly. You can feel good, by appreciating something. Thank you
Right.
so much for doing that exercise with me. And our next